Today is December 2nd, and this is Will. Today we talk about in the trend of ESG and fourth industrial revolution. That we're talking about fourth industrial revolution mostly in Europe and Asia. In US, we say like a digital business or digitalization. So anyway, in big two trend, which starts going on more and make more money. And also, from the next year, new administration, they more focus on the environment, also creating jobs. So in that case, probably the industrial sectors have more benefit. So I choose today RSG, ticker is RSG, the public service. First, waste management, ticker is WM. As you see the every day you can see that this mark that means your city has contract with the public service companies, which is RSG, right? Um, so when you see that one, it's your city is a contract with the RSG, and the other one is the okay, when you see when you see the this mark here, WM, that means that your city contract with the waste management. Okay, so we're gonna see the each one by one, and then first one is the public service. As everybody knows, they do the solid waste solutions and transfer, disposal, recycling, and environmental service. But they take care of the non-hazardous solid waste. That's the difference than waste management. And the date, December 31st, 2019 date, they said that they have 340 collection operation, 212 transfer station, 189 activity of landfill, 79 recycling processing center, 15 salt water disposal well, 7 treatment recovery and disposal facility. They business through the 41 state and Puerto Rico. And among them, the 75 landfill, they do the gas to energy and renewable energy project, and 130 closed landfill, and headquarters located in Phoenix, Arizona. Okay, and next is the waste uh, waste measurement. They do business like RSG, Republic Service, like here. So 244 solid waste landfill, but difference is here. They treat the hazardous waste landfill. That's the difference. And then 300 like the public service, they have 302 this transport station. And here is the explain about waste what waste management to do the more than the public service. So basically they do take care of the waste from the industry. So like fly ash and the fuel stocks kind of things. So you can close your screen and then you can read by yourself. Okay, and then they do the like a lamp trackers. What we give them something, they give us the fluorescent bulb kind of things. And interesting is that they have a portable restroom service, and I think they have too large of land in Texas. That's why they have oil and gas production properties. So, as I said, they are located in the Houston, Texas. Okay, let's see individual stocks in the Fidelity screen. The first one is the Republic Service, ticker is RSG, as you know, and so the PE is the 30. And say when you see the chart here, in my case, I'm using two lines usually. Blue line means the 13-day average curve, and then the purple line is 50-day average curve. So it's the price going down under the 13-day average line, and then in between, and then above the 50-day average line. But I think if you want to buy these stocks, then probably the under, like here, under 50-day average line is a good time to buy. And recently here, when they said they offering 1.1 billion note here, and then 350 million senior note at 0.8%, kind of one. So I think they need money through the bond. So they're selling the company bond, right? And the equity summary score is 4.2. It's neutral, but it was bullish, but now it's down to neutral. That's the one. And dividend is 1.75, and payout ratio is the previously 48%, now it's 53%, and dividend growth was 2017 was 8%, 18 was around over 8%, and 2019 was 8%, but this year is the growth rate is about around 5%. And the earnings is keep growing and beating the consensus here. And when you see the ESG here, everything is like ESG is the average level, and top competition is the public service and waste management here. And the fundamental, when you see the valuation is like in the middle, quality good, and financial health is okay, but growth stability is not much high here. So it's because it's located in industrial sector, but working like a utility company. So, and this one like Cognier is the AI chart analyst program. It says this is a good time to buy, and then later on the stock price go up after 6 weeks later, kind of way. And the RSG, their ex-dividend date is December 31st, which means that when you buy stock December 30 until December 30, you can have dividends 0.43, which means the 43 cents per stock. Okay, let's see the waste management. Okay, waste management here, the stock price here, and then the chart is not much different than the RSG. Anyway, it also under the 50-day average line. When you buy this stock, maybe have a good chance to buy in the deep kind of way. And equity summary score is 3.3, which means neutral. But the different thing is it was bearish to the neutral now. And dividends is 1.82%, and payout ratio is the previous year 50%, this year 62%. Dividend growth is the 2017 around 4%, 18 around close to 10%, 2019 a little bit above 10%, this year above 6%. And earnings keep beating consensus, which means good. And when you see the ESG, the overall average, and fundamental analysis, valuation, quality, financial health is not much different than RSG, kind of looking good. And growth stability compared to the RSG, the waste management have a more space for growth. And AI chart analyst says like RSG, This one also this is a good time to buy, and then the stock price go up after 6 weeks later. Okay, let's compare the key statistics. The first one is RSG. Second one is the WM, waste management. So when you see the stock price, not much different. And then when you see the 52 weeks price changes, the public service recently they have the highest price and then go to the sideway, but waste management still under the previous high price. And then so when you see the 52 weeks price performance, RSG is 9% up and waste management 5% up. So the volumes not much different. And then equity summary, as I said, the public service 4.2, waste management 3.3. But waste management, the public service is the equity score is kind of the downgrading now. Waste management equity summary score is kind of upgrading now, kind of way, but both still in neutral positions. And so the both sector is the industrial, and then the sub-industrial is the commercial service and supplies, and the market cap. The public service is 30 billion and waste management is 50 billion. So waste management is a little bit bigger company than the public service, and dividends not much different. And then our institutional ownership, waste management is 20%, a little bit more, about 50% more. Institution has the waste management, and among them here, Bill Gates has waste management too. And here earning per share similar, and the revenue is because the waste management is a little bit bigger, so that they a little bit making bigger revenue. And the employment employees, the public service is 36,000 people working for that, and waste management 44,900 people. And when we see their, let me see that their profitabilities. Okay, let's compare the profitability here, and RSG here, and the waste management here. When you see the profit margin, not much different here, around 10%, and gross margin is about 40%, and operation margin is around 19-18%. So when you go down, and the difference is here, return on investment, waste management is about 1% higher, and average 5 years ROI is 3% higher. The waste management is a little bit higher, and return ROE is definitely the waste management higher. So it's when you see which one is more profitable, I think in generally waste management is a little bit more profitability, higher profit. But anyway, yeah, that's the way it stay. Okay. Let's recap. So the big trend, at least 5 to 10 years from now on, ESG and fourth industrial revolution, all in the U.S. Digital business. So people thinking about number one is the E first, because it's easy to access, and then it's gonna be probably bring more jobs. Now we need more jobs because the unemployment rate is keep about the 6 or 7%, close to 7%. So which means the Biden administration, they more focus on the creating jobs, and then later with the ESG, especially the environment. And this time is one of the other trend is digitalization, which means the big data, and then cloud and AIs. So especially waste solution and recycling business industry area, they need a big data and then AIs. So that we gonna the managing our waste and recycling business area more efficiently. So I think that this industrial area is more beneficial from this trend, and then those stocks, and this one is the lowest price in when you see the 5-10 years the period. So this is a good time to have those stocks in your portfolio. So when you think about the stake in your portfolio, maybe the RSG and the waste management, you can do the one of the two, or you can do together, and then around the 10% or less than a little bit 10% of your portfolio. It sounds good. And the other one is you can keep them as the like dividend stocks too. Okay, that's all for today. Thank you. Love once more. Thank you twice.